2026 is here, and you want to build wealth the right way. Listen, you have to start investing. That's a part of it. But here's the thing, most people never start because it's not because they're too afraid to ask the dumb questions. Today, there are no dumb questions. Okay. I'm going live to answer everything you've been too afraid to ask about investing. So, this is what I want you to do. I want you to drop your questions in the chat right now and throughout this live. And let's make 2026 the year you actually build wealth the right way. What's good, y'all? I'm Courtney. Welcome to Investing Uncomplicated, where we help your money and the market make sense for the everyday investor. Y'all, so one of the top performing videos on our page is always the live Q&As. So what I want to do to kickstart 2026, and look, I'm getting myself together, y'all, because I know y'all gonna come with the fire. What we are going to do to kickstart the year is I am going to answer your questions live right now. And if you have questions, this is a great way for you to get familiar with me, a great way to get instantaneous answers to your questions. I'm going to do this until this is our live meetup night for our community. So I'm going to do this up until the point that our community meetup starts. So if you have questions, drop your questions in the chat. This is the time for dumb questions. Okay. Y'all want to invest, y'all want to do the right things with your money, and I am going to help y'all do that. So drop your questions in the chat. I am going to answer them as I see them come in. I see Mental Health Invincible ask a question: how about investing in mutual funds? I believe investing in mutual funds the same way that I believe in investing in stocks. Your mix depends on your risk tolerance. Okay. I think in most instances, this is a channel for the everyday person. For the everyday person, it makes sense to have about 60 to 65% of your money in mutual funds, the other 40, 45% in stocks. Okay. That's what I think makes sense for the everyday investor. My portfolio is a little bit more risky. So I'm probably closer to 50-50. But I believe that everyday investors should start investing in mutual funds because of the diversification. And in a lot of instances, there is less risk. I truly believe in ETFs, of course, exchange traded funds or ETFs. Those are types of mutual funds. And I like ETFs more than traditional mutual funds because they don't have the fees. Look, that question came out there. I think Mental Health Invincible, they dropped that question before they even knew that this was going to be a live Q&A. But I appreciate that question because I know that a lot of people are trying to figure out if they should be invested in individual stocks or mutual funds. And that was a great way for us to kickstart Q&A. Do I need a financial planner, or are they a waste of money? So this is how I answer that. Of course, I used to be a wealth manager, financial planner, whatever term you want to use. I do believe that they have a lot of value when they are providing you with a plan for your overall financial situation. So looking at retirement, looking at your insurance, looking at how you're managing debt, right? Looking at the total picture, that's really, really valuable. If you're only looking for somebody to help you invest your money, through the information that's on this channel, as well as being a part of my class or in my community, you can get really good insight on making an investments. And of course, you can use a digital broker to place your own trades. So if you're looking solely for how to invest, I would not use a financial planner for that, but they are great resources to help you get a complete view of your financial situation. Um, do I suggest investments in mutual funds? Do they have less risk? It's very similar to the question that I just answered. So I think, Denise, you may have dropped that as I was answering that question. What do you think about Netflix long term, and do you think it's a buy now? Billy, Billy must not checked out my last video. Check out my video, two stocks I like for 2026. Those two stocks are Meta and Netflix. I absolutely love Netflix for the long term, especially if they can get the approval to buy Warner Brothers. That's kind of up in the air right now. What ETFs, stocks, or REITs to invest in? Should you do self manage or allow the brokerage to do it? Um, I believe if you're tapped into this channel, you can self manage. ETFs that I like, and these questions are coming in, so I'm gonna try to keep up. ETFs that I like: SMH, um, VOOG. I'm gonna give y'all three: SMH, VOOG, and one that I really like, guys, that I hadn't mentioned publicly a lot, but I'm going to mention it publicly right now. And I want to make sure I give y'all the right ticker. It's TOPT. TOPT is the 20 largest companies in the S&P 500. I believe that the big companies are where the money is, and that's what's going to continue to grow. And that's a great way to invest in the 20 largest companies in the S&P 500. So ETFs I like: SMH, VOOG, which is like the 200 top growing companies in the S&P 500, and then TOPT, which is the top 20. I probably, because I like TOPT, I'm going to replace VOOG with QQQM. All right, replace VOOG with QQQM. That's just because of the overlap. Um, What strategy will you recommend to trace stocks to know when they are in the deep? Do you go to the stock market every day to check it out? Yolanda, so Yolanda is asking, what do I use to track stocks for when they dip? What I like to do, you can do this a number of different ways. What I like to do, because I am a big technical analysis trader and I look at charts every single day, I use TradingView, which is the platform that I use to do my charting. And I set an alert for when stocks have dropped 15 to 20%. So when a stock's price drops 15 to 20%, typically in the last 52 weeks is what I look at, it'll send me a notification, text and email. Let's see. I'm looking, guys. I'm looking through your questions. Lots of questions in the chat, y'all. Drop your questions in the chat, and I'm going to answer as many of these as I can. Um, the other part of that question was, do I go to the stock market every day? I do, but I don't advise you guys to look at your portfolio. Once a month is really sufficient for long-term investors. Once a month is sufficient for long-term investors. Dolores says, I thank God for your caring concern for little guys like us. Dolores, I believe the little guys become big guys. And I am committed to helping more people build wealth in the stock market because it's not as hard as people think. And so my mission, I believe what God has me here to do is to help uncomplicate the stock market for you guys. And that's what we're going to do. That's why I'm kicking off this year with this Q&A. I'm answering the questions that y'all have. I know that you want to own your finances, you want to level up in the new year. So we're doing this to help you in the process. And look, I don't know how many of these questions we're going to get to. I'm going to hang around as long as I have them. Okay. I have a lot of questions to answer. I probably have 10 right now. So I'm going to get to them. But I want to let you know that if you have more questions after tonight, Thursday and Sunday, I do a free beginners investing class. Okay. I would like to invite you out to that. Thursday, it is at 7 p.m. Eastern Standard Time. tomorrow, 7 p.m. Eastern Standard Time, or Sunday at 4 p.m. Eastern Standard Time. Beginners investing class, we talk about the basics, how you make money. The real special sauce of my free investors class is that I tell you what I look for in the stock. I also add in some tips to plan for retirement. Okay, that is something extra that we add. So tomorrow, 7 p.m. Eastern Standard, or Sundays, 4 p.m., to get more of your beginner questions answered. There is a link to register for my free beginner investing class in the description of this video. So be sure to check that out. Next question. I watched the podcast this morning with you and AO. My question is, how would you invest if you are starting with $100 if you don't have 1,000? I would take that $100. I would put um I'm going to tell you what I would do with the $100. I would actually invest, set it up as a recurring investment, and invest $10 a week. Okay. You're going to invest $10 a week into VOO. It's the top 500 companies traded on the stock market. I would take that $100, I would put that in my brokerage account. You can find some of my trusted brokerages that I like. They are in the description of the channel. Okay, go to some of my favorite brokers. Um, Transfer your $100, set up recurring investments, $10 every week into VOO. That's how you want to get started. I had a very similar question that somebody sent me on Instagram, and I'm going to do their question. What are the best stocks to start investing with $1,000? And you know what? I'm going to take one that's different from that. This other one is, if you have $10,000 to invest and you can't invest consistently, where should you put this money at this time? I like this question for a lot of reasons. If you have $10,000 to invest and you can't invest consistently, where should you put this money at this time? I will put the $10,000 in the brokerage, and whether it's the 10,000 or it's 100, I have a similar strategy. You want to invest a portion of that money consistently. So you're not putting all of the money in the market at once. The thing is, right now in the market is priced at all-time highs, which means that everything is expensive. Okay. So we want to be responsible with how we put money into our market. Into the market. So we want to invest it on a consistent basis. So we'll create a recurring investment. In this situation, I would probably do 200, let's say $300 a week, because this is going to make me easier to choose the investment. So with $300 a week, I do 100 into SMH. I would do 100 into QQQM. I would do 50 into Netflix and 50 into Meta. That's how I would handle that. $10,000, that is a one-time lump sum. $300 a week until the $1,000 runs out. How many individual stocks and ETFs should be in your portfolio? This is a great question. This is coming from Bernadette. Bernadette says, how many ETFs and stocks? So it's not about how many ETFs or how many stocks. It's not the number that matters. It's the quality of companies. So this is the reason why I told you guys, starting in 2026, you need to come up with a list of stocks that you just like, that you want to follow, because you're not going to invest in all of these companies at once. You are going to have your core companies and ETFs that you invest in consistently, right? You all hear me talk a lot about the same ETFs, some of the same stocks. You hear me talk about Meta, Netflix a lot. You've heard me talk about SMH, VOO, QQQM, the NVIDIA, right? These are the basic. This is the core, the foundation of your portfolio, and you dollar cost average into those consistently. Anything else that you add to your core investments, you're really only adding because you found a great company at a great buy. Similar to we talked about Google in March of 2025. It was a great company at a great price. Even if Google wasn't a part of your core investments, because the value was there, we added it to the portfolio. So it's not that you have to have a certain number in your portfolio. I would like for you to have five investments, stocks and ETFs, 5 to 7 stocks and ETFs that are a part of your core. Okay. And then you have another five that you are following so that you can buy them off the dip. That's how I would handle it. I told a story in the interview today. You probably heard it. There's somebody that loves me and AO to death. And so they just bought every stock that I talked about in 2025. And so they have a lot of stocks. And I appreciate the enthusiasm, but the goal isn't to buy all of those immediately. It's just to keep your eye on them for when you can get good value. Oh, I love this question from I am lyrics 9118. This is a great question. Sapphire C10, thank you so much for showing me some love, y'all. I appreciate you so much. Um, let's see. How many additional money should I put in my Roth account each month? I would put as much in you can put up to $7,500 a year into your Roth, $8,500 a year if you're over 50. I would try to max it out every month. Whatever you can afford, that's what I would do. But you can max it out. You would divide 7,500 or 8,500 by 12. So if you're over 50, 8,500 divided by 12 would be 708 a month. If you're over 50, if you are less than 50, younger than 50, it's 7,500 divided by 12, which is 625 a month. So I will contribute the 625 or the 835. And if you can't contribute that much, contribute the max amount that you can do consistently. Not every now and again, consistently, to the point that you're not worried about the money, you don't need it, and you're not going to pull it out. Is fractional share a good idea in building wealth? Yes. Let me tell you all something. This is one of these pillars of my investing strategy, okay, or my investing beliefs. Whether you buy a if you buy a full share, that doesn't make you more of an investor than somebody that buys a fractional share. Okay. Even if a stock is $1,000, you shouldn't look at it as being affordable or not, because you can buy that fraction. Who asked me this question? I am lyrics. Here's the deal. I am lyrics 9118. That fractional share is going to move the same way that full share is going to move. Okay. So if that fractional share is of an amazing company and your money is going to grow, buy that fractional share. It is a great way to build wealth, especially for the everyday person who may not have tens of thousands or hundreds of thousands of dollars to invest. So a fractional share, guys, is when a stock may be $100, but you may only have $10 to invest. Well, you can still invest in that company that's $100. You're just going to buy a fraction of a share. So in this example, you'll be buying 1/10 of a full share, and that 1/10 of a share will move the same way as the full share. Great question. What's going on, y'all? Thank y'all for tapping in. I see y'all. What's good, family? Um, How would I live off the interest of a few $1,000,000? How would you set that up to live off the interest? Would I have to pay capital gains, or is there a way to avoid taxes on the money? All right. Mental Health Invincible asking great questions tonight. Um, so this is what you do. Let's say you got $3 million in your portfolio. You're going to live off of about 5% of that a year. Okay. So I think that's going to be $150,000. Let me see. See if my math is right. I was right on point, y'all. $150,000. So $3 million in your portfolio can pay you $150,000 per year. Okay. And what you would do is you would set up automatic withdrawals where money is transferred from your portfolio every month. It will be $150,000 divided by 12. Now, the taxability on that $150,000 is going to depend on how your portfolio was set up. So if that $3 million was in a Roth IRA, that $150,000 that you're paying yourself a year would be non-taxable because with Roth IRAs, you don't pay taxes on the growth in your portfolio. If it's on a regular brokerage account or if it's on a 401k or an IRA, you would pay whatever your regular income tax is on $150,000 a year. Oh, Music in My Veins. Music in My Veins purchased my 5-week class, y'all. Y'all give it up for Music in My Veins. I'm excited to have you in the program. They're saying they want to take advantage of the 2 months within the community. So when you buy my 5-week class, you get 2 months in my exclusive community for free, but don't know how to access it. Please advise. We send you out. So when you register, we actually send you two emails. One for accessing the class, and there's another email for accessing the community. Check your spam box to see if you got an email from Investing Uncomplicated, and it should tell you how to access the community. If you don't see it, send us an email. It's support@investinguncomplicated.com. Support@investinguncomplicated.com. Happy to have the Music in My Veins. Let's see what else. With partial stocks, how much money is actually worth investing in partial stocks to where it makes a difference? Any amount makes a difference. You can invest as little as $5 a month. That $5 a month makes a difference. I had somebody, I had a guy that was in a class, and I kept his testimonial. But this was from like last summer, and he was like, "Man, I put a few bucks in the account, 10, $15, and he saw the 10, 15 grow to like 30, and he did another investment, and he saw it almost like double in value." And he was like, "Man, like I really see how my money is growing." So now what he's doing is he's working to find more money to invest. So I what I hear in this question is like, well, how much money do I need in order for it to, I don't know, maybe like help me pay my bills or something like that? And honestly, what happens, even with very small amounts of money that you're investing, is you see the market work. And so then you begin to prioritize investing because, see, right now, when you're a beginner, people aren't prioritizing investing. It's like, I want to figure it out, I want to learn it, and I'm going to throw a little bit of money in there. But what happens when you see the strength of the stock market, you see how your money grows, then you're like, oh, you know what? This is actually a priority. So you look at those random trips to the mall differently because you're like, instead of paying $200 on shoes, I could put $200 in a market. Instead of you going to happy hour twice a week, you're like, you know what? Instead of me taking 50 bucks and spending it at the restaurant, I'm gonna take that $50 and put it in the market. You start looking at your money differently, and that's way more valuable than the money that you make when you start investing $5. Because what's about to happen now is you're going to put yourself in position to actually become a millionaire. So, whatever amount you can afford, trust me, it makes a difference. And I don't even care if it's $5. Awesome. Somebody, uh, Ken Goddess said that she just registered for my free class. Guys, I do a free beginners class on Thursdays and Sundays. There's a link in this description for you to register. But if I don't get all of your questions answered, I do a question and answer period during my free beginners investing class. So register for the class through the link that's in the description, whether you do Thursday or Sunday. Come is great information, and we'll get all of your questions answered there. So looking forward to having you, King Goddess. Veronica asked, "Are these stocks long term? When do you sell?" So I am a long-term investor and I don't sell my stocks. Okay. I hold my stocks for forever. And I don't know, I'll pass them down to my daughter. Um, if I have other investments, I may borrow against them and make other investments. I just hold my stocks and my net worth just goes up and up and up. See, here's the deal. If you invest in stocks and you make some money, then you sell it, and then what do you do with that money that you made? Right? You take that money, you go on vacation, or you take that money and go shopping. Well, then you just starting all over again. And then your net worth is exactly where it was when you started, and maybe even less. How you become wealthy is by letting your money grow. Now, if there's a short-term money need and you're like, hey, I actually need to take my investing gains and use it for something else, well, you gotta, do what you have to do for sure. But the ultimate goal is to get to a place to where your money grows for you and your net worth grows indefinitely. Sapphire, um, is an ETF like QQQ or VOO good to invest my traditional and Roth IRA in? Also, is it good to own individual stocks if you already have them in an ETF? Yes, yes, yes. You can. I believe in owning individual stocks that already exist in an ETF. Nothing wrong with that overlap. Okay. Um, ETFs like QQQ or VOO. I would do QQQM. Okay, QQQM or VOO. Those are both good in your retirement accounts. Okay, they're low cost ETFs. They're gonna grow. It includes the top companies in the stock market. I like those in your retirement account. But yeah, thank you so much, Sapphire. I'm gonna go down. Sapphire asks another question. I'm a high earner. Is it good to have both a traditional and Roth? I do plan on signing. Oh, perfect. Signing in to your channel tonight. So, Sapphire, for high income earners, here's the trick for high income earners. Um, and I don't know how high income your earnings are, but if you get to the point to where you can no longer contribute to a Roth IRA or only contribute a fraction of the max, then you have to do a traditional IRA. And when you do that traditional IRA, you can do what's called a backdoor Roth, where you convert the traditional to a Roth so that you can get those tax advantages. But you have to do that strategically. The people that I work with in terms of retirement strategy, I tell them to do it incrementally, so a little bit every year, and I try to only get them to do it when the market is in a deep dip to reduce the taxability of your conversion. Because when you convert from a traditional to a Roth, you do have to pay taxes on any gains at that point. But if we do the conversion when the market is down, those gains are less, which then reduce your tax liability. Great questions, Sapphire. Thank you so much. Let's see what else we have in here, y'all. I got a couple more minutes. I'm gonna take a few more questions. Let's see. Um, What stock should you purchase for both long term and short term? I want long term. The stocks that I recommend, I only talk about long term investing. That's my specialty, helping beginners. So any stock that I've mentioned tonight, those are all for long term. I'm retired, not by choice, but now collecting Social Security. It barely covers my expenses. I have 120K saved. I don't have extra yet to invest. Any recommendations on mix in portfolio? In your situation where preserving capital is most important, I really would wait till you have some of funds where you can put in the market and you're not as dependent on. And I would stick to some of the ETFs you've heard me mention, like VOO, QQQM, those would be great places for you when you are ready to invest. Um, I'm looking through y'all questions, y'all. Bear with me. Should you open more than one brokerage account, or is having one enough to invest? This is what I believe. I would have one brokerage account that you like. If you're using one you don't like, get you one that you like, because you need to make investing simple and you need to understand it. If you the broker you're using, you don't know how to place a trade, you don't need it. If you don't like how it looks, you're not going to use it. So find one that you like, is easy for you to trade, you like how it looks, because you'll keep using it. Somebody said, how can you buy a fractional share on Schwab? You should just be able to take whatever amount that you have to invest and tell it that you want to buy dollar amount, not quantity, and then it should execute your trade and it will do the calculation for the fraction that you buy. Some brokers, Schwab could be one of them. I know Vanguard is one. They will only allow you to buy fractional shares if you set it up as a recurring investment. So I will look into that. But when you're placing your trade, just enter the amount that you want, select dollar amount, and it'll calculate the fraction that you bought, that you are buying. I love the fractional shares questions. Yes, Melissa, you can buy fractional shares in Fidelity. Um, Amos, yes, I do. I do teach an options class as well. If you're interested in my options class, shoot me an email, support@investinguncomplicated.com. All right, this is my speed round, guys. I got like 4 minutes, so I'm gonna answer these fast. If I don't get to your question, don't be mad at me tomorrow. I'm doing a free investing class. Bring your question to class tomorrow, 7 p.m. Eastern Standard. The link to register for the free class is in the description to this video. Also, if Thursday doesn't work for you, I'll do the free class again on Sunday, 4 p.m. Eastern Standard. All right, this is a speed round. If I don't get to your question, don't be mad. Just please register for the free class tomorrow. AB, please email me at support@investinguncomplicated.com. Antoine, appreciate that love. Yep, Tommy saying on Schwab, they call it stock slices, is the term that they use. Is an IRA a tax advantage account? Um, Not in 2026. We don't consider it to be tax advantage. It's not like a Roth IRA where you don't pay any taxes on growth at retirement. Do I think it's okay to use Cash App for your broker? I'm cool with Cash App. If you like it and you're going to use it. Steven, do I like Bitcoin? I do like Bitcoin, especially when it's cheap, under 85,000. Somebody asked the same question about the IRA. Perfect. All right, guys. Look, that is all the time that I have. I got to get to my community. We have our meetup starting in 20 minutes. And so I got to get ready for those guys. Again, I invite everybody out to attend my free investing class Thursdays, Sundays. Link to register is in the bio. If you haven't already, make sure you subscribe to the Investing Uncomplicated channel. Share this with a friend. Turn on your notifications. I'll see y'all in the next video.